This is a chart of the S&P 500 futures market, and I'm showing about 7 days worth of data. And you can see in this relatively short period of time, this market covers a lot of ground. There is a huge potential for profit trading this market, but the risk associated with trading the futures is huge. I think it's too much. In fact, I think it's the single reason why most people leave this market with less money than what they started is because of the risk. What I have done is I've developed a program for myself in which I trade this market every day, but I use the options. I use the options for two reasons. Number one, I can participate with much less risk, and I can also, number two, participate and establish positions on both sides of this market, so I can reduce the risk to participate, and then I can also reduce the demand for me calling tops and bottoms in these markets. From day to day, you never know which way they're going to go, but the important thing is to be on in the market when it does move. And so with the weekly expiration options, which is what we focus on, one will outrun the other. So if we have positions on both sides of the market at these areas that I'm going to describe to you, one will go further than the other will lose, and so you end up with a net profit. So if you look at our trading results, I mean, you're going to see a fair number here of losses. Well, it's not so much that we lost there. It's just they're basically insurance policies. These represent the options in which the market went the other way. But look, we were on the good side here, and at the end of the day, at the end of the week, we're showing a net profit, and that's really where I wanted to be with this. I did not want to live the life of a trader dependent upon being right every day and finding these pivots, because the risk in doing that is just far too great. So let me just briefly describe the program. This is our daily trading plan, and this is what you get before the market opens each day, and it shows our levels. These are target levels that we're looking to trade to, and what I look for during the course of the day are confirmations on the smaller time frame and this chart as well to look to see if these areas are going to hold or not. And my favorite things to look for are these long tails. These are squeeze plays, both at resistance and support. They're very revealing for the longer term swing moves, that is being 1 or 2 days in length, and they represent a lot of potential profit in here. So when we do get a move to the upside, establishing calls in here, and we come up to an area of resistance, I will actually send out a tweet in real time that says, okay, this is what we're going to do. We're going to move these calls up, and we're going to establish puts here. So I end up on both sides of these markets, because these are areas or guidelines, but when we're looking and making higher highs and higher lows, you never know if this thing's going to continue to go up. If it does, I want to be a part of it. If not, if this is truly the top in here, which it starts to do, well, then I want to make sure I have the puts on here to capture that move. Either way, I want to be in it, and that's what I teach. Okay, so we come down here. Resistance is in place here. It's confirmed by this little fishtail here, and we come back up. We test it again, and then we finally go down to support here. Trying to do this with the futures, you pull your hair out. But with the options, it's very doable because you can wait out, and I'm trading these out of the money options, so I'm not investing much at all. With the weekly expirations, the option costs between $1 and $3. With the multiplier being $50 in the S&P, I mean, you're talking between a couple of $100 to participate here per contract. So, you can, with a $3,000 account, you can trade 2 at a time. And not take on the risk that you have to with the futures. So continuing on here, you see how we came down. We moved our puts down. We established calls in here. And all these positions, once we start rolling in here, finance the next one. So you're not dipping to the account for more risk capital as you get going with the program like you do with the futures. With the futures, you're always resetting the risk clock. With these option positions, one strategy rolls into the next, and you can continue to build the account. And you can see here we get a confirmation here. We bounce to the upside. If the puts go to zero, we'll phooey. That's fine. But look what the calls do. I mean, the calls just go right up to the moon here. They go through this area and start to work their way up to the next. I put on some more calls in here. We finally get up to the area for our objective, and then we come back down to support. And we just executed this off here this morning. So we're constantly working to be on both sides of this market. And we use this framework, these very useful guides as far as resistance and support to guide us in our positions. So I invite you into a free trial for what we do, and you can see exactly how we go about in obtaining these very consistent profits. Upper right-hand corner, there's a request demo button. Not looking for a credit card or anything. Just include your Twitter ID with your information, and we'll set you on a 3-day trial, and you can see for yourself how these levels guide us and how we execute our trades at very little risk.